Hey, Johnny, welcome back. Another great episode of your podcast. Are you well and healthy today?
Doing well still, man. Doing great. Life's going wonderful with family, and man, once again, just getting ready for this summertime here in Michigan. Can't wait.
Great.
So
It's going to
yes,
be great.
sir. Going well.
That's good. That's good. Well, let's talk about let's get going well with the podcast. We're continuing this mini series on life insurance and all things around there. And one of the hindrances I think people consider or think about, and they think they can't get life insurance is if they have what I guess what's called a pre-existing condition that would exclude them from life insurance. Is that still a big thing?
It Man, it's totally changed. So I've said this in the past, and even in the book, I started kind of in this overall industry of insurance and developed more into retirement planning and stuff over the years back in the late 90s. And when we first started, okay, I first started, if you were like had diabetes or maybe had a heart attack or ever had cancer, you were
Mhm.
pretty much going to be declined. Okay.
Right.
And how they did the underwriting is you had to fill out an application, and at least at this company I was at, and most companies, most of them you had to do a full exam. I don't care if it's a $15,000 policy or you had to do some kind of saliva test or things like that. Okay. So it was a lot more in depth to these type of things, no matter what. Believe it or not, over the years, things have changed so much that I have had people that have had cancer 7, 6, 8 years ago get approved for policies that are
Wow.
day one benefit policies. What does that mean? If you pay your premium, you're covered once that premium's paid for whatever the benefit is. Now, you'll see stuff on TV. We see them all before, man, since the 80s, right? And what are the commercials? Guaranteed not to be declined. You're going to get insurance. It's guaranteed. It's only, 20 bucks per unit or whatever, something like that. When you hear the word unit, it means per thousand, just so you know. But
Okay.
guaranteed acceptance policies have like generally a 2-year waiting period before they fully go into benefit. Okay.
Oh,
So when you
okay.
see that stuff on TV, it's, oh man, that sounds great. It's 20 bucks a unit. Wow. You sign up for it. If you read the print and talk to somebody and they take a look at your policy, during the first 2 years, if you pass away, they'll only get the premiums you paid plus maybe 10% back.
Okay. So not much.
A lot of people sign up for that. That's geared towards older folks, but a lot of them sign up for that because they're like, well, man, I got diabetes or I got this or that or whatever, or I just need life insurance. Today, day one benefit regular policies, half a million, a million, 25,000, whatever it may be,
Wow.
the diabetes under control, you can get approved. Had
Mm.
cancer recently, depending on the severity of it, you can get approved. Man, I had a heart attack 6 years ago. You can get approved still. It's amazing how far the underwriting
Yeah.
has come to where things that you'd be declined for just several years ago are now covered, and sometimes even at like decent rates. You'll generally pay maybe a little more than the person that ever had cancer, but it's generally not like twice as much and stuff. I mean,
Wow. That's
it's
great.
so amazing the things they accept. And also, most of the companies now, a lot of them up to $1 million, you don't have to do an exam anymore. They're
Oh,
simplified
wow.
underwriting. And why is that? Because they can find everything out about your health
That's right.
through all these systems that doctors report to and stuff like that. You
Yeah.
know, whether it's
That's
the
great.
prescriptions, MIB, which is medical history, all those things are reported to those bureaus now, just like a credit report. Okay,
Okay.
so MIB is like a credit bureau for
Hmm.
health. Okay,
Okay. That's
so
cool. Didn't know
just
that
like
was there.
whenever you go apply for a car loan or a mortgage, they go to the credit and they look,
Yeah.
okay, he's got a 750 or 620, whatever it is. When you apply for life insurance now, they go to this MIB and they see on there, oh man, this guy was hospitalized for 4 days 4 years ago for this, or he had a heart attack, or he had this or that. On the prescription check, you're taking this pill, you're taking this pill, you're taking this pill. So now in the applications, we want to disclose those things,
Right.
obviously. But if
Right.
there's something that's missed, they'll find out about it.
Oh yeah.
whether or not you have an exam. Now, sometimes the exams are required for certain face amounts and different companies, but they made simplified underwriting so simple now
Hmm.
that up to certain ages, man, even if you have blood pressure medication and cholesterol, and maybe you're taking metformin for diabetes or something like that, yeah, they'll take a look at it and you can get approved still. It's
That's amazing.
unbelievable how far they've come. So the point is, don't be discouraged. If
Right.
you're listening to these, you're like, man, all this stuff the last few weeks sounds great, but this isn't for me because this happened or that happened or whatever it may be.
Right.
Nope.
A new
And
day.
also tobacco rates.
Yeah.
If you quit 12 months previous, you get a non-tobacco rate.
No
And you could
way.
smoke for 40 years, and then you quit smoking and you come to see me for life insurance. You quit 14 months ago. You can get a non-tobacco rate still. And there's
Wow.
even a couple companies that count like vaping and stuff like that as non-tobacco still on some of their products. So
Hmm.
once again, it's finding the right niche and right need
Yeah.
for you, and where you're at and the best thing for you. But the bottom line on that part of insurance is it's advanced so much that people that would literally be declined or we wouldn't even try to do insurance on,
Right.
15, 20 years ago. Now it's like, oh yeah, man, there's a good shot at this, or whatever it may be. And
That's
sometimes
very
you order records from your doctor.
yeah.
You don't have to do it. They'll just get a hold of your doctor. The doctor sends over your records and they can see, because they're still going to take a look at you, but they can do this now because people can live for a long time with diabetes. People can live
Right.
for a long time with cholesterol. People can live for a long time after having a heart attack, even
Hmm.
cancer and things like that. So
How
um,
cool.
it's always worth a shot, at least checking out and saying, man, I don't know if this can happen for me. Absolutely. Let's check and see. Let's check and see if it
Absolutely.
could be. Some people will still be declined for certain things. It's depending on what kind of cancer stuff, but it is amazing. I'm amazed all the time.
It is.
I'm like,
Well, it
wow,
gives people hope now. So don't disqualify
yeah, I'm
yourself.
like,
Yeah.
wow, this person got approved. Even I don't believe it, but
Right.
like
That's
it's
crazy.
unbelievable, So uh, you see all that happen so much, and I think we're going to talk about this in this a little bit too. Is how do I find the money to pay for this stuff?
Yeah.
Right now, you mentioned something a few weeks ago, which is so important. Is maybe you're getting RMDs out and you're older and you're starting to draw money, but man, that thing about the long-term care, chronic illness thing sounds so good to me because I don't have any kind of protection for that. You can take those RMDs and put it into one of these products that turns that after tax money, which would be taxed on interest made, but now an insurance policy, boom, you've created a pot of money with that RMD that you've got to provide yourself with this insurance premium that's going to cover all those things. So that's one way to find money for it.
Yeah.
And I mentioned this a few weeks ago as well. Man, that 401k, you're getting matched 5%, but you're putting in 10. What if we took that 5% and kind of, and I want to use this word carefully, but you're investing in your financial future through an insurance plan. So
Yeah.
you're taking an extra 5%. We know, number one, we can use it to help supplement retirement with the right plan, but also it's going to provide you with all that protection you need. Now that goes into some planning. Hey, how's your 401k going to look? What else you got going on? It's not necessarily everybody can do that, but I will say when we run reports and stuff, man, a lot of times some of these insurance plans that can utilize for supplemental retirement, as well as all these other benefits, it makes sense to take some of those percentages and invest in that for your family's security, for your security for illnesses. So those are ways we can find money sometimes that we're like, how am I going to come up with this? Sounds great. And the tax-free retirement supplement sounds great. All these benefits sound great, but I can't find $400 a month to make
Right.
everything look perfect. Well, let's take a look and see what you're investing in this side. It's just reallocating sometimes.
That's
And
right.
if it makes sense for you, reallocating those funds can be a perfect fit for your overall future for your family, for yourself. Um,
It's
along,
always it's always a good investment to take the time to sit down and talk with you. I think that's what's coming down to me because we've been talking about life insurance and the investments there. You're talking about 401ks and RMDs and all this stuff are all investment vehicles. But I think the biggest, bestest, if that's a word, investment that somebody can make, Johnny, is to take the time to get a copy of your book, to read it, and to sit down with you and invest 30 minutes or an hour with you and just start laying out some ideas about retirement, talking about these different tools, life insurance, annuities, different things, but investing that time so you can help educate them. You can answer their specific questions that we can't do on the podcast and really educate them so that they are a better consumer and they go, okay, I understand. I think we need to go in this direction. What do you think, Johnny? And then you guide and direct them. So a good investment is to sit down with you and just talk, right?
Yeah, and you go to newheights.life. You can fill out a form to get a copy of the book. Set up a time where we can talk on the phone initially, or meet, or Zoom, or whatever, just to hear. It's a listening session. I want to hear what you got going on, what your concerns are, and let you know maybe, hey, these are some of the pieces of the puzzle you may be missing. Not just for necessarily retirement purposes, but overall family financial security purposes, right?
Absolutely.
Broaden your umbrella some. Don't just zero in on, oh my gosh, I gotta have $500,000 when I retire, or I gotta do this or that.
Yeah.
Take a look at where you are and realize, man, I can do even more than that possibly
Right.
if I go in the right direction. So yeah, if you
Yeah.
go to our website, man, fill it out. We'll get you a copy of the book, and you can set up a time to, like I said, just have a conversation.
Yeah.
And we'd love to be able to do that.
I
Or
think it's great.
retire at New Heights dot com.
Retire at newheights.com. That's the name of the book as well. Retire at New Heights, because that's what you help people do, is retire at New Heights. And you do it with this big toolbox that you have, with the years and years and years of experience you have, to sit down, have conversations, and guide them, understand their needs, their desires, and say, here's what we can do. Here's how you can have a safe, secure retirement and provide for all of these options and things. So another great episode, Johnny. I'm super excited. Looking forward to coming back again next week with another phenomenal episode. So thanks for being here.
Thanks, Mike. You have a good one.